Good morning, everyone. Thank you for joining us today. I am sure that more people will join us, but we can start now. I think it's time to start. My name is Marta Fernández de Alarcón. I'm the Secretary General of the Spanish Business Council, and I want to welcome you to this webinar about doing businesses in Saudi Arabia with one of our members of the chamber, Deloitte. As you may know, they are one of the most important Big Fours in the world, so we are very pleased to count with them in the chamber. I am delighted to present today for this webinar this amazing expert from Deloitte today, Michael Camburn, Middle East Indirect Tax Leader, Cherlyn Samaniego, Director Business Process Solutions, Kamran Ghouri, Senior Manager Business Tax, Agustin Terroba, Senior Manager Transfer Pricing Senior Manager, and Zainab Mearaj, Manager Indirect Tax. I want to say thank you for all the collaboration and support and this webinar today it's because of you. The Spanish Business Council is an international community, and although most of our members are Spanish companies, not all of them are. One of our main purpose and goals from the chamber is to be an international community. With all our members, we are creating an amazing platform to share ideas, to make networking, to find collaborations, and to make businesses in the UAE. So I think I will not. I will let them speak today, and I don't want to waste time to our speakers. So you can start now. Thank you so much.
Muchísimas gracias, Marta. Hola, buenos días a todos. Hello, good morning, everybody. My name is Mike Camburn, and I'm delighted to be hosting this seminar in conjunction with the Spanish Chamber of Commerce. It's a great pleasure to be able to be here. I have been in the Middle East now for just over 5 years, and frankly, those 5 years have seen an incredible development around the amounts of investment coming into the region, but in particular to Saudi Arabia, where I personally have been based for the last 5 years. In conjunction with that, the amount of changes that we've seen from a taxation, from a regulatory perspective, show that the Middle East really, and in particular Saudi Arabia, is literally the hottest place to be working in at the moment from that particular perspective. In the context of the speakers that we have with you today, we've assembled a number of my colleagues who will speak around certain themes and topics within Saudi Arabia itself, with a view that they give you a flavor of what it's like to do business within the country itself, some of the challenges that are faced, some things to look out for. I think it bears stating that taxes in the Middle East are relatively new. But one thing which is absolutely for sure is that, like most taxes, they're here to stay. And certainly, as we transition from the oil-based economies into more private sector-focused economies, we will see those taxes continue to develop. And indeed, we may even see the introduction of new taxes as well. We've got an interesting agenda for you today, I hope. If we could move on to the next slide, which will cover off investing in Saudi Arabia. Could we just go back a slide? Thank you. Investing in Saudi Arabia, what it takes to set up a legal entity within the country, and hopefully my colleague Cherlyn will be joining very shortly. We'll cover that. Then we'll just touch upon very briefly the main taxes that we see in the Middle East. As you'll see, there's quite a lot going on at the moment. My colleague Kamran will take care of the direct tax side of things, that is tax, corporate tax, zakat and withholding tax in Saudi Arabia. And then I'll be joined by Agustin, who's going to cover off transfer pricing developments and audits. Again, another area which is really beginning to develop very quickly, as we've seen over the last few years. And last but not least, Zainab is going to touch upon VAT, what's been happening there from a big picture perspective, looking at e-invoicing, the real estate transaction tax, and also at the end, hopefully, we'll have a little bit of a Q&A. If during the course of this particular session, you have got any questions, you should find at the bottom of your screen a box which has got Q&A. So please feel free to type your question in that, and we'll look to do our best in order to be able to answer that for you during the course of the session itself or at the end. I'm pleased to see that Cherlyn, I think, has managed to join us. So I think without further ado, I'll hand over to Cherlyn to take us into investing in Saudi Arabia.
Thank you, Mike. Hi, good morning, everyone, and welcome to the this webinar and with the theme doing business in Saudi Arabia. So as Mike mentioned earlier, so I will be covering about investing in Saudi Arabia. So as many of you is aware, there has been a lot of projects and initiatives being launched in Saudi Arabia. There are a lot of giga projects like NEOM and Kidaya and other development projects in process in Saudi. In addition, there are a lot of initiatives such as the Regional Headquarters Program, Economic City Zone, and other changes in the regulations such as the company law and the professional law. So some of these topics I will be discussing on this segment. So with that, if we move forward to the next slide, please. So in terms of investing in Saudi Arabia, this is the right moment to invest in Saudi Arabia because of, the projects and the initiatives that I initially mentioned, and these are all in line with the Vision 2030 in Saudi Arabia. But before we go into the details of how to set up an entity in Saudi, I would like to highlight three main considerations that shareholders or investors should be mindful of and thinking of when setting up an entity in Saudi. So the 3 points will be who is going to be the shareholder, and the second is what will be the business activity or in the intended operation, and the third is who will be your target market. So on the first point, just to go one by one on these 3 points. So on the first point, who will be the shareholder of the KSA entity? Because in some countries or some jurisdictions, you can leverage on the tax treaties and tax benefits based on the shareholder of the entity that will be intended to set up in KSA. So that's something that you should think of, and accordingly in some aspect, there are also some additional requirements or process that is required depending on the intended shareholder of the KSA entity. So that's the first point. And then on the second point is the business activity. So basically in Saudi, each business activity corresponds to a type of license. So based on that operations, then we can able to assess what type of license you need to apply for, because there are different types of licenses. There is a service license, trading license, a professional license, and manufacturing license. And each type of license has its own, let's say, share capital requirements or compliance requirements. So that's why it's important that in the first part, you should know already what is your business activity or the operations that you intend to have in Saudi. And of course, the last point is the target market. Because Saudi is a big country, there are different cities and each city has its own, let's say, specialization or its target market, so it's very important to have that in your assessment when thinking of investing in Saudi, so that you can set up your office in the location where you can fully maximize the opportunity for your target market. So these are the three main considerations when setting up an entity. So once you have decided on these 3 points, then you are ready to set up an entity. So in terms of setting up the entity, so as a standard process, you need to go through the 7 main authorities to register the entity. So the first authority will be the Ministry of Investment in Saudi Arabia, which is the MISA. So this is the authority wherein they will be issuing the MISA license, especially or for those entities who will have a foreign ownership shareholder. So this is required. So once you have the MISA license, then you need to be registered with the Ministry of Commerce or the MOKI. So during the Ministry of Commerce, so this is the authority wherein they will be issuing the commercial license. So once the commercial license is issued, so the legal entity is generally set up already. So you can start all your contractual arrangement in terms of entering into vendor agreement or customer or employment contracts. So you can start that process because you are already a legal entity in Saudi. So this MISA and the MOKI can be generally be completed within, let's say, 6 to 8 weeks once all the necessary documents have been submitted. So in terms of the documents, so these are all the standard corporate documents that they need, such as commercial license of the shareholder, articles of association of the shareholder, last audited financial statement, and of course the resolution to set up an entity. So once you have the commercial license, then you can go to the other 5 remaining authorities, which can be done simultaneously or in parallel. So the next authorities will be the Chamber of Commerce. So in this process, we need to register the company along with the general manager. So that's why in the initial setup, the name of the general manager is also mentioned in the resolution. So that's the Chamber of Commerce. And then the next authority will be the Ministry of Labor and the government organization for social insurance, or they call it the GOSI. So these 2 authorities can be done simultaneously. But the only requirement here is that, or the additional requirement here is that you have to have your first Saudi national employee to be able to register the KSA entity with the MOL and with the GOSI. So once you have this, and then the next authority will be the ZATCA or the tax authority. So this is, you need to be registered with the tax authorities. So you can get your tax identification number, which will be later on can be registered for the VAT also. And then lastly will be the municipality. So the municipality is, the requirement here is that you have to have your physical office in Saudi Arabia. Because the municipality people will go to your office and then they will inspect the office with proper security, fire prevention, all these facilities are in place. And then once that is done, then they can issue the municipality license. So these are the 7 authorities to outline again. So these are the MISA, the Ministry of Commerce, Chamber of Commerce, MOL, GOSI, ZATCA, and municipality. However, there might be a requirement for special approvals from other authorities depending on the business activity. Like for example, if you will be in the let's say in the healthcare sector, so you will be needing to have in the Ministry of Health, to be registered also, or to get special approval if you are into the healthcare industry. For the construction industry, generally there is nothing special unless there will be something related to the environment or to the security or the controls, then then we need to get special approval from these respective authorities. And then so once you have set up the entity, then the next objective is that you stay with Saudi. You stay in Saudi in the sense that you have to be compliant. You have to be compliant in all the statutory, regulatory, and tax compliance perspective. So in this presentation, we have outlined the main compliance requirements that is required for you to maintain, and for you to maintain your entities in Saudi. To maintain your entity in Saudi. So the first one is the corporate entity management. So the corporate entity management refers to all the license renewal, like the MISA and the commercial license that needs to be renewed on a regular basis. So like the MISA license is every year needs to be renewed, and there is a payment to be paid to the MISA authorities. While for the commercial license, generally the MOKI gives licenses in 1 year, in 3 years, or in 5 years. So basically, yeah. So based on that, then you need to renew the commercial license. Now on the Arabic invoicing and so I'll discuss first more on the Arabic accounting, the Arabic invoicing. This will be discussed in more detail during the VAT discussion on a later part of this session. So for the Arabic accounting, so as per the regulation, it is required to have your general ledgers and trial balance to be in Arabic. However, we have seen in recent experience that some authorities allow English general ledgers and journal entries. Yeah. So from that perspective, we find some flexibility, and maybe because these are all in line to encouraging investors in Saudi. However, the recommendation is that um, we should follow the what is mentioned in the regulation, because we'll never know the mood and the requirement from the authorities, because as per the regulation you have to have the Arabic accounting. And then the next compliance requirements is all about the tax, like the corporate income tax, withholding tax, and the VAT compliance tax return filing, which one of my colleagues will be discussing in more detail also in the later part of this session. And then the other requirement is the wages protection system. So this is related to the payroll, because in Saudi, it's required that all employees under the sponsorship or who has Ikama, who has Saudi Arabia Ikama under the KSA entity should be processed locally, meaning all their salary payments should be processed from the local bank account of the KSA entity to the local bank account of the Saudi employee. And then once this is processed, so there is a specific file which needs to be uploaded to the MUDAD, which is again one authorities who who um who monitors, that all salary payments are done as per the wages protection system in Saudi Arabia. And then, in relation to that also, or more on the employee related, so there is this Saudization requirements. So each entity, based on the industry and based on the business activity, there is a Saudization ratio required for you to be able to hire a non-Saudi employees also. So we have our expert also, from the immigration and GES team, who will be able to guide you and advise you on how to properly manage your Saudization and your resource planning to be able to consider, the time of recruitment and the number of employees that you have in terms of the non-Saudi in relation to the Saudi employees that you intend to have in your KSA entity. And then the other compliance requirements is the submission of the audited financial statements. So at year end or after year end, once the audited is completed, then you have to file your audited financial statement in the Kawaim portal, which is managed by the Ministry of Commerce. So generally, this is done by your auditor because, they have all the information, of course, on the financial statements. And then lastly, and of course, if applicable, then you have the transfer pricing requirements, which again, one of my colleagues will be discussing the details of that towards the later part of this session. So these are, let's say, the general guidelines in terms of setting up an entity, and of course, maintaining to be compliant for your KSA entity once the entity is set up. Which leads me to my next point on the next slide, please, which is what are the general challenges that we have seen, from our clients and from the KSA entities or to the KSA entities also in already set up in Saudi. So some of the challenges are around the process, the data or the systems, and the people in the organization of the KSA entity. Because of too many compliance requirements in Saudi, it's important that all these aspect of the process, the systems, and the people are all aligned and organized and structured in such a way that you will be able to prepare the report, provide the documentation, and any other information to the authorities whenever they request that, as part of the compliance requirements. And some of the processes that we have seen, from our clients, which we have been, helping them, to streamline this process or to minimize these challenges. So like in the processes, we have seen the processes are not standard. Some of the processes are manually done, so there's a lot of reconciliation issues. And now in Saudi, all the portals and the authorities are connected, so if your tax return are not in line to, for example, to some of your VAT numbers, then the authorities will generally be able to catch it because it's all portal and it's all electronic. So it's very important that all the processes, that your process are streamlined and structured in such a way that all the information are aligned, reconciled, and readily available when the authorities will be requesting it. And that also related to the data and the system, so it's important that you have the proper system who can capture all the information, who are easily be usable, to be able to provide all the information to the authorities. And lastly, and of course the most important part, is your people. It's important that the people that you have are knowledgeable in terms of the technical expertise, in terms of the local experience, because now Saudi is really evolving. There are a lot of changes in the regulations. So you have to have the right people who will be able to inform you on the changes, how it will impact your business, how can you be prepared, and all these kind of things. So it's important the people, and of course the retention of the people, because if people are resigning and leaving, so the knowledge transfer and the experience will also go. So you have to be mindful of that as well. So yeah, so these are the main like challenges that we see, and it's very important that for you, when you set up an entity, to have this arranged and organized also internally. And of course, through service providers, this is something, like Deloitte, this is something that we can support you, and how we can set it up, and how we can guide you on all these aspects, or how we can cover you or collaborate with you to minimize all these challenges for your KSA entity. And moving on, and one of the other compliance requirements, just to give you one of the recent compliance requirements in Saudi, is the regional headquarters program, which comes to my next slide, please. So yeah, so one of the compliance requirements, can we show all the points, please? Yes, thank you so much. So one of the compliance requirements in Saudi is the regional headquarters program, which is recently issued, not actually recently, but 1 year ago. It was issued in 2020. So the regional headquarters program is required if a KSA entity would like to participate in government tendering or RFPs whose customer will be government entities or semi-government entities. So the idea of the RHQ program is that the parent company or the shareholder of the intended KSA entity should set up an RHQ program. So this RHQ program, or the regional headquarters entity, will be like a separate entity, uh, in addition to your operating entity, because the regional headquarters program cannot generate revenue like operational revenue. The main objective of the regional headquarters entity is that it will perform functions under the strategic direction, management function, and other RHQ license activities, such as like the support services, such as the accounting and finance, HR, sales and marketing, IT, all these like support services. So these will be the only activities of the RHQ entity in Saudi Arabia. And then one of the requirements for the RHQ entity is that the RHQ should have 15 employees within the first year of its operation, or once from the moment that the commercial license is issued. And out of these 15 employees, 3 should be on the corporate executive levels, like the likes of CFO, CEOs, directors, or vice presidents. And these employees should be under the sponsorship or under the ICAMA of the RHQ entity in Saudi. And then, so as I've mentioned, this RHQ entity, um, so the RHQ entity will not generate operating entity. So you have another KSA entity which will be operating entity who will do all the services, whether it's a service to provide services or to manufacture products or goods, all these kind of things. So that's a different entity. The good part of the RHQ entity and part of this program is that there are certain benefits that this RHQ entity will be able to experience or will be provided to the RHQ entity. And some of the benefits are, there will be visa limit exemption. So basically, there will be no Saudization requirement from the 15 employees that you will be employing under the RHQ entity. And basically, all the entities under RHQ does not need a Saudization requirement. And therefore, and also there will be waiver of professional accreditation in relation to the operating entity in case you need to participate in the government tendering. And also another benefit is some related to the spouse work permit and the dependents age up to 25 years old. And then there is a service provided by the RHQ program wherein they can provide you all the services, like the end-to-end services. And lastly, and the most important benefit of the RHQ program is the government tendering, which I mentioned earlier. So with the RHQ entity, you will be able to participate on all these RFPs issued by the government entities. And for those who already have customers in Saudi, then you will be able to continue to have that contractual relationship with these government entities once you have this RHQ entity. And this RHQ entity will be effective January 1, 2024. So what we normally inform our clients is to start setting up the RHQ entity so that by 2024, this is in place already so that they can benefit on the government tendering or they can continue on the contractual relationship they have with the government entities. Um, so that ends my, the investing in Saudi, and definitely I will be happy to address any questions that you have today or towards the end of the session. Thank you.
Great, thank you, Cherlyn. Monica could move on to the next slide. I think it bears stating, as I said previously, that there's lots of change which is happening in Saudi Arabia at the moment, and the RHQ is a very interesting facility which they've set up in the kingdom. And quite literally, there hopefully will be some additional tax benefits which will come from that, but we're yet to hear about those in the grand scheme of things. If we could just move on to the next slide, please. So very briefly, as we move on to the tax section now, I wanted to give you a very quick overview of the taxes which exist here in the Middle East. As you can see, corporate tax and withholding tax is pretty common, the only exception to that being Bahrain. Likewise, you'll see that the green ticks down the transfer pricing column, that is increasing year on year. And I think the expectation is probably within the next 2 to 3 years, most if not all of those red crosses, or white crosses rather, will turn green. Last but not least, it bears stating that Qatar is highly likely to introduce VAT, we believe, probably with effect from the 1st of January 2024. Kuwait, in theory, should be introducing VAT, however, doesn't show a lot of appetite to do that. So we haven't heard much in the context of Kuwait, but you should anticipate that Qatar will most likely have VAT with the commencement of 2024. With that, I'll hand over to Kamran just to take us through corporate taxes, withholding taxes and zakat in Saudi Arabia. Thank you, Kamran.
Yeah, thank you, Mike. I'm Kamran. I'm senior manager. I'm specializing in zakat and direct tax. I'm based in Riyadh.
Sorry, Kamran, you're on mute.
Yeah, sorry. Hello. Hi, everyone. I'm Kamran. I'm senior manager specializing in zakat and direct tax. I'm based in Riyadh. I'm going to cover in the next few slides some key corporate income tax aspects relevant for Spanish companies with investment operations in KSA. So can we move to the next slide? Yeah, thank you. So broadly speaking, in Saudi Arabia, there are two types of taxes. One is corporate tax or corporate income tax. The another is zakat. Both of taxes are based on the nationality. That means that a local entity taxation is decided on the basis of nationality of their shareholders. For example, a local entity which is 100% owned by the Spanish entity, it will be subject to income tax. And there may be a situation where a local entity is owned by a shareholder who is 100% owned by a Saudi, or belong to any country, resident in any country which is part of the Gulf Cooperation Council, which is UAE, KSA, Bahrain, Qatar, Oman, Kuwait. Those are subject to zakat. So there may be a situation where a local company may be partly owned by Spanish company, for example, and partly 50% owned by a Spanish company, 50% by any GCC entity. So it will be subject to tax 50% and 50% will be subject to zakat. We termed it as a mixed entity. So for corporate income tax, which is more relevant for the Spanish, from in a Spanish perspective, the blanket rate is 20% on the taxable income. It follows the traditional format of calculating the tax base, which is starting from profit before tax, and there are few adjustment, few allowances, disallowances as provided under the Saudi tax law, and then we apply 20% corporate tax. There are some special corporate tax rates also provided under the local tax law that you can see is specific to the oil and gas industry. I will discuss registered joint ventures later, but there are two types of taxation basis, possible taxation basis in Saudi. One is the actual profit basis, which is everyone is aware of it. One is the dim profit basis. So dim profit basis is applicable for those companies or taxpayers who are not maintaining books and proper books and records as required under the local tax law in Saudi Arabia. So dim profit basis is actually the tax authority assumes profit rate depending on the industry and subject to the minimum tax rates as provided under the tax law, which is applied on the gross revenue, and this is how the tax is calculated. Typical example could be, for example, a permanent establishment of non-resident in Saudi who maybe the project is specific, not required under the corporate law to maintain the records. They may opt to go for to be taxed on dim profit basis. Actual profit basis is that where the books are recorded and audited by independent external auditors. So it is good to go with the actual on actual profit basis. Zakat is applied on 2.5% on the zakat base. Generally, the comparison between the zakat and income tax may be misleading from the perspective that the 2.5% looks significantly lower rate as compared to the corporate tax rate, which is 20%. But there may be a situation where a company subject to zakat incurring losses, but may end up paying a significant amount of zakat. The reason is that the zakat is calculated on zakat base, which follows the different format as compared to the tax base. Means the zakat is heavily depending on the balance sheet, or I can say 2.5% on the net equity basis. The companies subject to zakat are taxable in Saudi. 2.5% is is basically the rate of Hijri year, which is, you can say, a lunar calendar followed by the Islamic world, and where the taxpayers follows the Gregorian calendar. The rate is adjusted instead 2.5%, 2.5776%. Pro rata basis, it is calculated and applied. So there is a concept of UJVs in Saudi as well. The joint venture is typically a partnership contract between between the partners or the different companies. They may be related parties or otherwise. UJV model is commonly used because there may be a foreign entity like a Spanish entity specializing in certain industry, and there may be for example, a government requirement for the bidders is to have a formal local commercial registration or the local presence, so that the foreign companies may not avail that opportunity. So one model in practice we have seen in Saudi market, that they opt for to create a joint venture with some local entity or having a good presence in Saudi to meet the requirements of bidding. And the good thing is that the joint ventures, which are called unregistered joint ventures, have no legal status, means they are not registered with any authority, but they are registered only with the tax authority to ensure that the tax obligations are met on time. So another key feature of the unregistered joint venture is that the joint venture is obligated to submit its annual tax or zakat or mixed return, as the case may be, as required in a regular situation. For example, the return is prepared on the regular basis as required for full-fledged limited liability company in Saudi, for example. But the only difference between other legal setup and the joint venture is that joint ventures are not supposed to pay any tax or zakat with their return, but only the partners in the joint ventures are supposed to settle the tax or zakat on their respective share coming from the joint venture. And capital gain tax, it is again 20%, similar rate to the corporate tax rate. It is applied only where the seller or the beneficiary owner of the gain does not maintain books in Saudi. But the only difference is that the reporting and the tax settlement requirement is that it should be done within 60 days of the gain or the transaction. Yeah, can we move to the next slide? Yeah, thank you. Withholding tax regime, it is very important but have a limited scope. It is applicable or relevant on the payments or settlement with the non-resident person, that is the person who are tax non-resident in Saudi, and the payment is for the purpose of goods, not for the purpose of services, which means that any payment on account of goods are not subject to withholding taxes. One primary criteria for the services is that the services should be partially or fully rendered in Saudi. There are certain exceptions I would like to highlight here, that for the technical services or consulting services, or there's a management services, that regardless of the place of service, it is required to settle the withholding tax on it. These are you can see before you, there are different rates depending on the nature of the payments, which is within a range of 5% to 20%. One important thing is that there may be a situation where a contract that includes a different nature of services that should be clearly stated, or because sometimes the management services or technical service are not segregated in the contract. So the tax authority is very much aggressive and may attempt to drag the entire agreement to the management services. Yeah. And for the related party concept, the scope of related party in Saudi tax law is there is a narrow scope. whilst the scope of related party in other statutes may be wider, the criteria of related party in Saudi tax law is that one entity will be related party of another if one controls another by way of 50% controlling interest, which means by way of shareholding controls the another, then the parties will be regarded as related party. Or there may be two entities under common ownership, then again they will be regarded as a related party. So the impact of being classified as a related party is that the payment may be subject to higher withholding tax rate as opposed to the regular withholding tax rate. If you can see the third line in the table, that the payments on account of technical services or international telecommunication services to the related party, including head office, is subject to 5%, while the regular rate is 15%, regular rate is 5%. So this kind of consideration are important. Another important point is that settlement or adjustment, sometimes it happens in the books of records that one control account is maintained for the related party or head office where debit credits are entered in the same journal ledger. So the tax authority has a position that netting of the amounts should be considered as a settled amount or actually paid amount or deemed payment, for example, and withholding tax should be triggered at that moment. So these are the key considerations. So can we move to the next slide, please? Yeah, thank you so much. Of course, non-compliances are penalized under the tax law, while this zakat regulation provides no penalty, but tax law provides either it is a failure to submit the return on time or pay the taxes on time. So the failure to file the annual tax return is there, which is subject to certain criteria. But the key thing is that non-payment or delayed payment of the taxes attracts 1% of the unsettled or underpaid amount of tax per 30 days. So means in multiple of 30 days, for example, one tax is delayed for 1 year. So I could say effectively 12% interest should be payable along with the principal amount of tax. There's another 25% on top if the tax authority is of the view that there's an intention of the tax evasion at the end of the taxpayers. So it is a discretionary. Practically speaking, in my 8 years tax practice in Saudi, I haven't seen imposition of those, which may be the extreme case. Perhaps the risk is there. So this is for your note only. Can we move to the next slide, please? Yeah, thank you. This is the comparison, quick comparison between the tax rates provided under the domestic law and the Spanish treaty. We have compiled for your eyes for quick consideration. The incentive we have seen is in terms of dividends, yes, and royalties. For dividends, there's a criteria that the shareholding should be more than 25%. Indeed, the principal purpose test should be considered because if the benefit under the treaty may be denied by the authority where obtaining the benefit was one of the principal purpose of any arrangement or transaction. So this is one of the key considerations should be in mind. Not going in much details because of constraints of time. We can, if you have any question, you can come to us later. Yes, can we move to the next slide? Yeah, how this is about the procedure to claim the withholding tax under the double taxation treaty. There are two broad approaches or options you may have. For example, if you are making any payment to the Spanish entity and you are of the firm view that yes, this relief is available under the tax treaty, then you can claim it in advance, which we call it at source relief. But any relief is not automatic, it should be applied manually. So first, it is the payment should be reported in the withholding tax return, which is the monthly filing, and then you may mention that it is zero rated because of so and so treaty. And then that withholding return must be accompanied by a few documents. Two are the major documents are tax residency certificate, which locally termed as Q7B form, to be approved and attested by the tax authority in the home jurisdiction, and also the Saudi embassy based in that home jurisdiction. And then the undertaking from the withholding agent that, okay, if anything goes wrong, I will compensate. The same documents are required to be attached with the refund approach, which is the second approach, that you settle the withholding tax first and then claim the refund on the basis of the same documents I have explained. But it is the much less risky approach, in the sense that if tomorrow, if any conflict in interpretation of the clauses under the treaty arises, then there's no risk of the delay fine on the non-payment of the tax, because tax is already been paid. The only thing remains is, if in case of refusal, we may have an option to go in appeals and to challenge the interpretational or legal issues with the authority. Yes, can we move ahead? Yeah, thank you so much. So this is the high-level comparison of permanent establishment. There's no service PE mentioned in either in the local law or the treaty, and I think this should be the one potential incentive for the Spanish investors, that how the KSA withholding tax may be avoided on services. But here, because it is only the Spanish treaty which does not include the service PE clause. But the concept of virtual PE is important to mention here. In summary, I would say that in Saudi, if the physical presence is not tested for virtual PE, and virtual PE may be created by the authority through an aggressive interpretation of the local law, is created by the local fiction of the local law, that any work which is required for the subject matter services. For example, if any Spanish entity is to give training online to me, for example, and provide me the ID and login ID and passwords, so that the training is being conducted from the Spain, the service is done in Spain, but I have to log in, means this is the something which is mandatory to conduct this training. So I will log in, which may be regarded as a work required for the services which is happened or incurred or done in Saudi Arabia. This is the reason that the entire services will be regarded as performed in Saudi Arabia, and hence covered within the scope of the Saudi source of income. This is how the tax authority has interpreted the virtual PE, but again, the service PE clause is not included in the tax treaty. This could be taken as a one argument to defend the case before the authorities, including the appeal committees. So this is all the brief overlook of the direct tax landscape from my side, and we can move on to the next section. Yeah. So over to you, Agustin, if you are hearing me. Yeah.
Thank you, Kamran. Buenos días, mi nombre es Agustin Terroba y voy a presentarles las próximas slides acerca de transfer pricing developments y audits. Good morning, my name is Agustin Terroba, and I'm going to be presenting for you transfer pricing developments and audits in KSA. For international investors, transfer pricing regulations are one of the most important areas in their tax planning here in the Quito. Please, the next slide. Saudi Arabia followed the OECD recommendations regarding transfer pricing documentation. So you will notice there are not much different between transfer pricing compliance in Spain and in Saudi Arabia. Taxpayers have to prepare a disclosure form and affidavit. This is mandatory for all the taxpayers. They have to prepare and maintain a local file and a master file. This is only for taxpayers with intercompany transaction exceeding 6 million. And country-by-country reporting for taxpayers with a consolidated revenue from $750 million. You have to take into account that CBC is required in Saudi Arabia to make a CBC notification even if the parent entity in Spain is preparing a CBCR reporting. This is something very often people forget in Saudi Arabia, that is required to make a CBC notification. Please, next slide. I will say probably there are three main developments in transfer pricing regulation in Saudi Arabia in the last or transfer pricing developments in the last years. I think the most important for Spanish companies, tax authority is developing, is putting more resources. People are more trained, more developed, and we have seen an important increase of transfer pricing audits. The second thing, the proposed changes to the transfer pricing by law. Until now, the transfer pricing by law was only covered taxpayers. Now it's going to be covered, or we expect it's going to be covered SACAD entities. And the third, and that also I think is very important for Spanish group operating in Saudi Arabia, or thinking to operate in Saudi Arabia, is the introduction of the regional headquarter program. I think my colleague Cherlyn has been talking about it, and the introduction of the economics free zone. We have right now 5 economics free zone. One of them is in place, the other thing are in the study, but I think there are until 20 more economics free zone that the tax authorities are considering. Please, next slide. Next, please. For a Spanish company, I think it will be important to know, to be aware of possible TP audit trigger points here in Saudi Arabia. One of the most important, persistent loss makers or low operating profit. This is something the tax authorities are following, especially with companies involving in EPIC contract, engineering, procurement, commission, and installation. We can see now the first years of the introduction of the transfer pricing regulation. It was introduced in 2018. Most of the transfer pricing audit was related to companies involved with EPIC contract and that had persistent loss or low operating profit. Another trigger point for the tax authorities in here to initiate a transfer pricing audit is the system of the business restructuring. At the same time, high royalty fees, significant intercompany transactions are always an important point of attention for tax authorities. Please, the next slide. I think we have received a question earlier today about how it's possible if the entity in the regional headquarters cannot have commercial activity, how it's possible that could be tendering in Saudi Arabia. The thing is to be within the regional headquarters programs, allow the group to tender in Saudi Arabia. So we expect that from 2024, we don't have yet the regulations, entities will have to move their regional headquarters to Saudi Arabia in order to make business with government entities. And the other thing important to understand in relation to the regional headquarters program is that the idea is to have a management center and a direction sector that provides some shared services. In order to do that, you have to have a very clear transfer pricing policy. You have to be able to move your functions into that regional headquarters entity and to have a clear transfer pricing policy how to do that. Why? Because one of the main incentives to the regional headquarters program, in addition to the possibility to come into tender process with government entities, is tax sections. I think it's a few weeks, I think it's probably 2 weeks ago, the Ministry of Investment made very clear declarations that the entities within the regional headquarters programs can expect some tax exemptions regarding the revenues in the regional headquarters entity. Yes, please slide. Next slide. I will pass to Michael. Sorry, Zainab.
Yes, Agustin. Hi, everyone. My name is Zainab Mearaj, and I'm a manager in the indirect tax team for KSA in Bahrain. I'm going to take you through a very, very quick few points on VAT, e-invoicing, and RET. Can I have the next slide, please? The next one. So starting with VAT, after the introduction in 2018, we've seen quite a number of amendments. The most recent ones relate to zero rating of exported services and some proposed amendments on potential reduction in penalties, such as the late payments and interest on late payments. The current VAT rate in KSA sits at 15%, which was increased in 2020. The next slide, please. So in terms of ZATCA audits, we've just listed the main risk areas which we've seen that ZATCA or the tax authority in KSA looks at, as well as the potential risks. These include input VAT, credit eligibility, transitional provisions, as we've moved from a non-VAT to a VAT of 5%, and then from a 5% to a 15%, there was a bit of unclarity in relation to the transitional provisions and how they have been applied. So we've seen that that's a major area that has been audited as well. The zero rating of services, reverse charge mechanism when you're buying services from overseas, the clash between the time of supply for VAT and the revenue recognition that's used for accounting for the financial statements, as well as the procedural aspects of dispute resolutions. So we've seen that these are the major areas that are currently being audited by ZATCA. Next slide, please. Okay. So in terms of other indirect taxes, we have real estate transaction tax in Saudi Arabia. This was introduced with effect from 4th of October 2020. This applies to all land and property sales, assignments, transfers, and any similar activities. Any legal transaction that in which the ownership or possession of real estate is transferred would fall under the ambit of RETT. This would include sale transactions, boot contracts, financial leases, barter transactions, also transfer of shares in real estate companies, use of fruct for more than 50 years, as well as gifts and wills. The current applicable rate for RETT in KSA is 5%. Next slide, please. Another hot topic in KSA is currently the e-invoicing. So the e-invoicing implementation resolution was passed in 28 May 2021, and the go live for the first phase, which is the generation phase, was 4th of December 2021. The generation phase only included generating e-invoices. The second phase was the integration phase, which is also currently being done in stages based on the annual turnover of the entities. The e-invoicing regulations would apply to KSA resident taxable persons, any self-billing and outsourced billing situations. In the case of non-residents who are operating or registered for VAT in KSA as a non-resident, e-invoicing will not apply. We've listed the transactions that are subject to e-invoicing on the right of the slide. So most of the types of supplies that are done by a taxable person would fall within the ambit of e-invoicing. When it comes to changes in supply, like cancellation, return, or suspension of supplies, any changes that impact the VAT treatment of the supply, as well as changes that impact the value of the supply, would also fall within the ambit of e-invoicing. Next slide, please. So the special integrated logistics zones, from a customs perspective, these are for like the points that would be good to cover here are that non-residents that conduct activities directly related to specified goods inside these zones will not be treated to have permanent establishment in Saudi Arabia. Goods that are inside these zones would be treated as under customs duty suspension, and companies may also opt to have their own bonded warehouse within this zone. Next slide. Yeah, I'm going to pass it back to my colleague, Mike.
Thank you, Zainab. Thank you, everybody, for your very kind attention now. I think we've got to the end of the seminar itself, and I know that we're at the top of the hour. So I want to say muchísimas gracias to Marta para organizar esto and the Spanish Chamber of Commerce. Also to Cherlyn, Kamran, Agustin, and Zainab for very kindly presenting their insights and thoughts around the tax system and the regulatory system in Saudi Arabia. I know we could have carried on talking for quite a bit longer. Unfortunately, we've only had the opportunity to spend 1 hour together. But if you've got any questions or any follow-ups, please do get in contact with the Spanish Chamber of Commerce or directly with Deloitte, and we'll be delighted to be able to answer those questions. Quisiera decir que también tenemos un equipo que habla español y sería un placer hacer negocios con ustedes. I'd like to say now, thank you very much for attending, you, our audience, and wish you a very happy, holy month of Ramadan too. Thank you.
Thank you.
Thank you. Maybe I think that we have some questions. I'm going to.
I think we answered most of the questions as
No,
they were asked.
It's done.
Yeah.
Yes, I've seen some, you know,
Todo hecho.
the red light, and I said maybe there's another one. Okay, so no more questions. I think again, thank you so much for collaborate with us and for this amazing webinar. I think it has been very clear, all the information, and very interesting as at the same time. And thank you so much, and have a lovely day ahead, and a good week also. Okay.
Thank you.
Bye.
Gracias, Marta.
Thank you so much. Bye.
Thank you.
Okay, bye-bye.